Most people think they are buying directly from a factory in China. In reality, they are usually dealing with a trading company, and most buyers do not even realize it. This matters more than people think. If you believe you are buying factory direct, but you are not, it affects your price. It affects your quality control. It affects your customization. And it affects how much control you really have when something goes wrong, because something always goes wrong at some point. So let us talk about how to tell the difference between a real manufacturer and a trading company. First, check the company name on the business license. Real manufacturers usually include words like manufacturing, industrial, or factory. If the name includes trading, import and export, or commerce, that is almost always a trading company. This step alone already filters out many suppliers, but it is not enough by itself. Second, look at their product range. Factories specialize. They focus on one product category or a very narrow range. They invest in machines, molds, tooling, and trained workers for that product. If one supplier sells electronics, kitchen items, beauty tools, pet products, and home goods all at the same time, that is not a factory. That is a middleman sourcing from multiple factories. Third, ask for real factory proof, not marketing photos, not stock videos. Ask for real footage of the factory floor, production lines, machines running, workers assembling products, in-house quality checks. A real manufacturer can show this quickly. If they hesitate, avoid the request, or keep sending polished photos, that is a red flag. Next, ask technical questions. Ask about materials. Ask about tolerances. Ask who owns the tooling. Ask about production lead times. Ask why the MOQ is set at that level. Factories answer directly. Trading companies usually need time to check with the factory. That delay tells you who is actually in control. Another simple test is how they communicate. Factories may not have perfect English, but their answers are specific and technical. Trading companies often sound fluent, but their answers are vague. Now, here is the part most buyers misunderstand. Trading companies are not automatically bad. In some cases, they are useful. They help with smaller orders. They help with consolidation. They help when buyers are not ready for factory level volumes. The real problem happens when buyers think they are dealing with a factory, but they are not. They negotiate the wrong way. They price their product wrong, and they lose leverage when quality issues happen. That is how buyers overpay. That is how responsibility gets passed around, and that is how problems drag on. At SourcingXpro, we do not guess. We verify factories on the ground, we check production capability, we inspect quality, and we confirm exactly who you are buying from before any money moves. If you want to source from China with clarity instead of assumptions, reach out to SourcingXpro.